lending, solar, electricity, e-commerce, education. So we're going to do a deep dive into that today. We have a lot to cover, exciting panel, and not a lot of time to cover it. So the way we'll operate today is we'll operate a little bit like a news show, where I'm going to ask the panelists, I'll do a little rapid fire and ask them to give some quicker responses. And then we'll have some Q&A. And to get started, I'm actually going to let the panelists introduce themselves and say a little bit about what they're doing related to finance and fintech. And since we're in Rwanda and the Honorable Minister is here, I thought that I would start with Honorable Minister Claver Gatete, who's the Minister of Finance for Rwanda. And Minister Gatete, can you say a little bit about, if you had to summarize the digital finance landscape in Rwanda concisely, maybe to somebody who doesn't know it, what would you tell them?
Thank you so much, and thanks to the audience who are here. Very difficult to summarize it that way because maybe a few elements could help in terms of explaining it. In Rwanda, like in many other countries, everybody needs money. And money has to move around, and the technology becomes very important. Where the money meets technology is what really you would call fintech. But we have also realized that it's not only money, but also all the services that you want. Whether you're buying or you are selling, whether you are communicating, everything requires the IT system. And that becomes very, very important. It has now become a part of our daily life in terms of communication, in terms of working, in terms of moving money around, in terms of everything that we do. So the technology is really a big factor now in everything that we do, and that's how we see it. The fintech here, we concentrate mainly in the financing side, whether it's the normal money that you transfer, withdraw, deposit, whether it's trading on the capital market, whether it is doing any kind of transactions, purchasing few goods and services. It's really the technology that helps us in terms of making sure that the money moves very quickly. And that velocity of money is what brings in development in terms of economic growth.
Any idea the percentage of digital payments in Rwanda?
Yeah, in 2011, actually we had just started what we call the Rwanda Integrated Payment Processing System. It was 0.3%. And to last year, end of last year, it was 26.9%. Our target is in the next 7 years, where by 2024, we should be at 75% in terms of the e-payment as a percentage of GDP.
Okay. Okay, and let me do a little housekeeping. You know what, I think I'll introduce all the panelists before asking them to say a little bit of what they're working in. So we talked to Minister Gatete, and next to me is Mrs. Alice Kilonzo-Zulu, Managing Director of Ecobank. And we have Rose Muturi in the middle here, Regional Manager at TALA. And then we have Mr. Moussa Dembele, who's the CEO of Danapay. And then I couldn't forget Dr. Abdigani Diriye, who's an NEF Fellow and a research scientist and manager at IBM Research. So let's go to Rose. Just tell us a little bit about what you're doing, your entity, and what you guys are doing most directly related to this panel on fintech.
Right. Good evening, everyone. So my name is Rose Muturi. I am a statistician, and I work in a company called TALA, which is a data science and technology company, which also happens to be giving out loans. So what we do is we use what is called alternative data to assess how someone can be able to get credit using a mobile app. And based on that behavior, we're able to disburse loans to them in under 3 minutes. That's our business.
And what, you mentioned this to me yesterday. Remind me of the countries that you guys are in.
Great. So TALA started in Kenya in terms of where we have the highest number of customers. But the other countries we are in Africa is Tanzania. We launched that in May of last year. But we also have a presence in the Philippines as well as Mexico. So we usually target the developing markets, if you will, but we look at the target segment that could be able to also afford a smartphone, Android, because that's where our application runs from.
And just one more thing. I know you guys have a number of finance rounds. So do you consider yourself still in startup phase or just a fully operational company?
Yes, we still are in a startup phase because we've done 2 rounds of funding so far. And based on that, actually, if I can just state some numbers on our business, we have more than 1.5 million customers we've been able to give loans to, at least in the past 3 years we've been in operations. And in terms of volume or the amount of money, we've been able to disburse more than $300 million. Now, we know there's a whole segment of customers we need to be able to reach to. So we still are in the startup phase because we are still looking at our credit models to make sure they are more effective, they can crunch larger numbers, and also with our expansion plans because we still want to go into the rest of East Africa and also other parts of Africa. We are hoping to get into another round as well.
Okay, and we talked a little bit about there's perhaps a blurring line between traditional banking and fintech now. So I wanted to go to Alice from Ecobank. Is there a line between fintech and traditional banking? I guess tell us a little bit about what Ecobank is doing here in Rwanda, and of course, if you want to talk about a little more broadly the continent, that's fine too.
Thank you very much, and good evening, everyone. So those of you who may not be familiar with Ecobank, we are actually present in 33 countries across Africa, so we see ourselves as a Pan-African bank. And last year, we actually ventured into an initiative to bank 100 million customers by 2020. Obviously, in doing that, we cannot do it the traditional way. So what we realize is that we actually have to put digital in the forefront of that initiative. And to that extent, we've actually rolled out what we call our mobile banking app. And what it does here is enable people to actually open accounts digitally. I think traditionally, most people, you'd probably have to walk into a bank, fill in account opening forms. But we realize if you're going to achieve 100 million customers, that is not something that you can actually do. And within Rwanda here, we are very fortunate that the government is very focused on a cashless economy, very focused on getting the unbanked into the banking sector. And we think that some of the products that we are rolling out will actually respond to that space. Perhaps also to add, in 2017 as a bank, we actually rolled out a Fintech challenge where we challenge young innovators to come up with innovative solutions around the banking space. So as a bank, we see the digital space as a very, very key one. And there's a very thin line, I think we would say, between the fintech and the banking sector. In fact, we work quite a lot, increasingly being approached by the fintech companies to find ways of collaborating. So I think the way we were doing banking before, the traditional banking now, is changing to a large extent. We are collaborating a lot with the fintechs, with the telco companies. It's really not business as usual in that space.
Okay, thank you. And next, let's go to Moussa Dembele, who is in definitely a bit of a different world. He's the CEO of Danapay, which I understand is, and I'll let him explain, but is blockchain-oriented and initially going to start with remittances. And as I understand, you guys are very much in launch phase, so very new. So please tell us a little bit about that.
Thank you, everybody. Yes, I'm Moussa Dembele. I'm the CEO of Danapay. We are building a payment system that is trying and that have means to activate some revolutionary usage around blockchain technologies. We are leveraging blockchain technologies values. We will offer a service that will reduce cost because by using blockchain, you can really reduce the cost of remittance. We will also offer services that reduce the time of transfer when, for example, you use a classical bank system to send money. It could take 1 or 2 days. With blockchain technology, it could be very low. And to finish, we also offer a system that make transfer not sorry, my English is not very, very, very good.
No, you're doing great.
And no problem. And when you want to send money, By using classical operator, you are obliged to have the same operator. With blockchain technology, we will not have interoperability problematics. It will be very, very simple. And then we already have developed a system, and we are currently in discussion with some telcos and some local operators to activate some users. For example, if you are in Canada and you want to send money to your family to pay the hospital fees of your mother, you could be faced with some issue, like, for example, you send money and the people who receive money don't use it for the normal usage. And with Danapay, we will be able to define the scope of usage of your money. If you send money, the people will be able to only pay for the hospital, and we could not be able to retrieve cash. This is one usage that we are trying to develop in some countries. And the other example of usage is that, for example, you are in Kenya and you want to pay some stuff with somebody who is in Nigeria, for example. We don't have, if you don't know who is these people, you don't have the trust with these people. And our system will offer you the ability to send money, and the money will be locked. And then when you will receive the stuff, you will just by a simple SMS or with your application, be able to unlock the money. Then the person who send you the stuff could be able to retrieve his cash. And to finish, Danapay is a global system that will develop a trusty system around Africa. And this system will not be necessary rely on a central system. And this is the advantage of the blockchain.
And just one other thing you told me I thought was interesting is that you're developing the system so that the money can be flagged toward certain uses, right?
Yes.
So if somebody sends it for their kid to use for tuition, then it can only be actually used for tuition.
Yes.
Okay. And let's go to Abdigani. Just a little bit about where you are and what you've been doing in terms of fintech at IBM, or I don't know, maybe that's extended into your fellowship here.
Thanks, Jake, and good evening, everybody. As Jake mentioned, I work at IBM Research Africa. It's the 12th research lab that IBM has opened. And our mission really is to develop innovations and technologies that will impact and address some of the big challenges facing the continent. So I manage the financial services research, and over the last 4 or 5 years, we've been working in a number of different areas, from micro-lending to RegTech to conversational agents. So with some of the work that we've been doing around credit scoring, we've been trying to essentially identify what people's creditworthiness is, as Rose mentioned, using alternative data, so data that we can find on the continent. Other work that we've done have been around conversational agents. So this is really important because one of the biggest challenges to extending financial access and financial inclusion is financial literacy. So the question there is, how do you go about funneling information to people in a personalized way? So this is another line of research that we've been exploring. I should really paint the big picture, which is IBM Research is, as I mentioned earlier, the largest commercial research lab in the world. So when it comes to other research areas such as regulation tech or insurtech, there are other researchers who are doing work in that area. So another thing we try and do is take these innovations and see how we can customize it and deploy it on the continent.
Okay, I'll throw out some, I'm going to throw out a question and let anybody take it or everybody take it. If you looked at Africa's financial landscape, or in some cases the lack thereof in terms of people unbanked, if any one of you were to name the top 2 ways that fintech could have an impact on, I guess, Africa's people, what would you name? So who's ready to jump forward? I think Rose is, I see her.
Yes. Actually, so one of the things I'd mentioned is naturally when you talk about fintech, it's access to credit. Because we believe so long as someone or an economy, so long as individuals or small businesses can be able to access credit, they can be able to expand into various horizons. So what we've done as TALA, for instance, is the kind of customers we get onto our platform, we've been able to get more information by asking them what exactly are they borrowing for. And the data has shown that 70% of our customers are borrowing to either start a business or to expand an existing business. And when it comes to the age group of the customers we're targeting, they're between 18 and 35 years old, which would be classified as the youth. So what is very interesting about the target segment is if you go the conventional way, where you tell them we need to see either bank statements or we need to see transactions for a period of time, they may not necessarily be able to give you in a format that had been predefined using conventional financial ways. So that's why we defined how can we be able to pick this information, because it's available. These customers are doing business, and all they needed was someone to believe in them. And one thing we do as TALA, we say we have radical trust in this customer segment, and we allow them to get money and be able to start the business. We actually get them sending back photographs to show us, remember the money you gave me? This is the small shop I was able to start. So for us, we started with credit, but there are other products that we're looking at. Because one of the worrying things in the data we've seen, the number 3 reason why people borrow is because of health. And you'll find maybe it's because a child is unwell, or they are unwell, or someone in the family. So by the time they're borrowing for, for something to go pay in the hospital or to buy medicine, it means if they're the ones affected, for 1 or 2 days, they'll be out of business. If it's a close family member, still 1 or 2 days, they'll be out of business because they have to take care of that. And yet we keep talking about micro insurance. So there's a gap therein, which we as TALA are saying, we've gotten to the point where can we look for partners, because we don't want to reinvent the wheel, and try and solve for this need, which has emerged from the data we've been able to collect.
Yeah, and I'd like to definitely jump on that. I'm sorry, you were going to? Go ahead. Yeah, I was going to jump on Rose's point. So she's touching upon, I think, 2 very key points. Which the first one is around alternative data. Leveraging data sets that we can find here on the continent, and then using that to understand and profile people so you can offer them the right services. This is incredibly important. And another area of research that we've been focusing on is around SME lending. So what we've been trying to do at IBM Research is to think about one of the biggest segments on the continent, which are SMEs. There are, by some estimates, around 200 million SMEs, and the biggest challenge they have, again, is credit, and traditional forms of data just doesn't work. So what we've been trying to do there is thinking about what data sets do these guys generate. So it's typically transaction information. If they have suppliers and FMCGs, there's that trace information that you can then use to slowly start to build a rich profile of that SME. That's an area I think that's going to be pretty hot and pretty important. Another area that we're quite vested in is around identity. Right. And I mentioned this earlier in my talk today. Identity is a global problem, and I think a problem that's also quite important for Africa. If we're able to figure out, new forms of digital identity that encapsulates all the different facets of an individual, education, healthcare, financial services, you're able to offer them the right services and bring down those barriers to accessing financial services. So I think those are probably 2 very key areas that I think will really define how services are channeled to people.
So you get a lot coming back to just kind of ease of doing business, kind of access to working capital, and then a bit on just having a rainy day fund at the family level for anything that may come up. Minister Gatete, did you have something?
Maybe I wanted just to turn it the other way around. I just wanted to give just a live example of this country here, where in 2008, the access to finance, the formal and informal. The informal one was 21%, but if you had a combination of how people are accessing finance, it was we at 46%. Then we had to assess as government to say what we need to do. Two things. One of the things that was very surprising is that about 27% of the broad money, all the money, was actually outside the banking system. You don't know who is keeping it. So you cannot lend it out.
Right.
And we wanted to bring them back to the banking system. And that was a challenge to someone who is doing monetary policy. At the same time, we had very few banks concentrated in the urban areas, very few in the rural areas, very few branches. And then you had to establish the savings and credit cooperatives. As government, we supported the establishment of 416 of them across the country. And at the same time, we combined it with the technology. In the central bank, when we were there, we hired a company called CMS Small Systems. And we said, we cannot continue to do business like this because if you want a transaction, if you want access to money or to a loan, it will take a long time. And this has an impact on how economy grows. So we introduced what we call the Rwanda Integrated Payment Processing System. And we forced, I would say, the banks, including Ecobank, we said, we need you to have core banking system that are standard. We gave them a list of the top 20 in the world. So you could find them having FlexCube, Delta, T24, so many of them that are known. And then we had to align them to make sure that the payment can go faster. So with that system also, we developed a settlement system whereby if you are trading on capital market, the settlement system could also be done very quickly within 2 days. So with that one, that's when we started seeing how things are moving very fast. We introduced the card system and then the mobile payment system. The products, the banks now came up with different products on how people can be able to move money very quickly. So with that system, within 4 years from 2008, it increased from 48% to 72%. And then we also, because of that kind of knowledge sensitization and making sure that the people can keep the money in the banking system, they can access credit, they can use any tool, whether it is a phone, whether it is an internet, whether it is any tool that you have. Then we saw that another 4 years, 2016, in March, we saw that had increased to 89%. So it's a combination of several things. It's a combination of access, making sure that the facilities are there, and not necessarily a physical presence, because now people can use a boutique, can use anything to make sure that they can do the banking. You don't necessarily have to have a physical infrastructure. But at the same time, you need to have the tools to use in terms of transferring the money, or using the money in terms of borrowing, in terms of lending. But at the same time, the technology that supports that moves the money very fast, is incredible. So we have seen this one being transformed that has helped the Rwandans in terms of access to money. And now people are getting used to it. Actually, we are almost, the mobile phone, the mobile payment is now moving way faster than using a card. The things we used to teach people, you need a Visa, you need a MasterCard, you need China Union Pay, you need this and that. Now it's mobile. It's convenient, it's comfortable, people are getting used to it. So we are seeing this one becoming a transformation. When I was at Central Bank as a governor, when we started the mobile payment, I was trying to find how to regulate them. And I had to invite the telecom company CEOs together with the banks. Initially, they were confused because they never go together. And we were telling them, banks were choosing the telecoms, you are cheating us and you don't have a license to be able to sell money. And the telecoms were saying, no, we also need a share of this. So I brought them together to see how we can solve this kind of issue, because you need each other. You need the technology, but also you need the banking. How do we do it? And we did it together with the regulator of the telecoms. And it worked out. And from there, we designed now the regulation that helps them in terms of doing their business, but without any conflict. So what we are saying is we need technology, but also we need sensitization, and then we need the infrastructure that we can be able to help in terms of access to credit.
Perhaps I can just add to what the minister was saying. I think you touched a little bit about having the branch networks in the countrysides. I think given where the technology is going, you actually don't need those branches anymore. We're actually moving towards a banking sector where it's pretty much going to be branchless, to the extent that you can really open an account using your mobile phone. You just need to go any time of the night, whether it's 3 in the morning, daytime, whatever time you're free. You can actually today, here in Rwanda, actually, open an account using your mobile phone, and that's because we're able to also collaborate with the telco sector. As he mentioned, you can actually, your mobile number becomes your account number. So that is a development within the banking sector that we are finding is helping bring in more people to the banking sector, because a lot of people feel very intimidated walking into a bank to open an account. You can imagine someone out in the village, and maybe the closest bank is probably about 30, 40 kilometers. Why do they need to walk into a bank to open an account? In this day and age of the fintech, we are saying actually, if you have your mobile phone, you can actually open a digital account at any time, and again, begin to move that money as well. And if you need to make payments now, we are no longer actually looking at cards, as he mentioned. We have now what you call the QR code. Again, using your phone, you can actually just make payments very easily using that. So I think this kind of innovations is what's going to drive the economy, is what's going to push us in the banking sector to do things differently compared to what we were doing before.
Thank you. Moussa?
I want to add something very important about the adoption of this new usage. There is one issue today that we can encounter all over in Africa. This is the cost of these products, and I think that technology can go over this problem. For example, with blockchain, like I said earlier, with blockchain you suppress some structural costs. For example, today if you want to pay with Visa cards, Visa takes some fees. If you make some transaction in the bank, into bank system, classical system, we have some settlements fees with SWIFT, for example, that is up the cost. So by leveraging the internet, this is the basic building blocks of blockchain. By simply using the internet, if you have access to internet, you can make some transfer, but a very low fee. And I think that today banks and governments must take initiatives to leverage the values of this technology. And I think that government must support startups that are trying to leverage this kind of technology, because this is very valuable for final users.
Yeah, and on the benefit side, Moussa and I were talking about how, there's multiple studies about how, Africans at home and in the diaspora have the highest fees on remittances anywhere in the world by pretty large amounts. So we were talking about, cutting those in some way is effectively a big tax cut to some people and to some economies. So I want to jump ahead, and we're definitely going to end up on regulation, and I think Minister Gatete started to take us there.
Maybe if I can just react to what our colleague here is talking about,
please.
which is very, very important. One of the biggest challenge is the change in technology. Today, you buy what you think is the cheapest, and then before you actually finish implementing it, there is another cheaper one. So it becomes now another problem. It's moving so fast. And what he's saying is that sometimes you install it, you invest in it, once you finish, then comes like a smart guy like him, and he says, oh, this is much better for you, and actually finds this is better. So the speed at which technology is changing is really a big challenge, and we have been seeing it here in Rwanda. And that's why our colleague is saying, using a phone now becomes like almost the best, because we've preached using all cards, and it was taking a lot of time. And again, there was a cost, as you mentioned, from SWIFT to using any card and all that. And then the next day you see another technology. So it becomes really very, very important to see how to manage this kind of situation. And the innovations, for us to invest in those kind of innovations, we have opted to establish a fund, the Innovation Fund. We as government borrowed 30 million. The private sector agreed to put in 70 million. So we are starting with a fund of 100 million. So with that fund, we want to mobilize the resources up to 1 billion using those kind of resources, so that we can be able to use the young people with the new technology, with the new innovations, and then to see how we can keep improving. But of course, also being cheaper for all of us. If it is, for example, developed here, because you can easily customize it, you can easily encourage the new technologies, and as we move forward, it's a big investment. See, what we need for us, looking at it from the global level, from the economic point of view, we want the speed of how the money is being used. And that speed, if it is very high, it means the economy grows faster. If it is slow, then that's the growth that you get. And that's why, as government, we are very much interested in the technology that can help in terms of complete, like quick payment, so that once you can move money very quickly, that velocity of money per day, you can see how many transactions. And that has impact on the economic growth directly. And that way then it becomes much easier for anybody to start doing monetary policy because you can get all the data in one system. The only thing is technology is moving the money, but I know where the money is. So if I'm controlling inflation, I know what to do if I'm in charge of the monetary policy. So it has all the advantages of how to control the economy, of how to grow the economy, but at the same time of making people richer very quickly. Thank you so much.
Thank you. Well, I want to jump off from that, and we'll come back to regulation. And it's actually amazing that we've gone this far in a fintech panel without saying Safaricom or M-Pesa. I don't know if that's heard of anymore. But I just wanted to ask very quickly, and I'm going to take this question into another one. If any of the panelists can name another fintech payment-oriented lending application on the continent that has scaled as fast or has the same kind of market share as M-Pesa, because it's hard to find one. I mean, I think of maybe Paga Payments, which I understand has transferred 2.9 billion in Nigeria since its inception. But any other examples other than M-Pesa of fintech products or applications that have had that same kind of market share in other markets?
I think there's Wari. Those who are familiar with Wari, I think there's Wari in
I've heard of
Senegal.
it.
Yeah, which is really doing very well as well.
Okay.
I think that's another very good example.
Okay. Any others?
There's Beamer in Ghana. They are a micro-insurance company, if I'm not mistaken. So they've done pretty well as well.
I think the difference is that M-Pesa in Kenya, I think, was also more the mindset of the people. Yeah. I think there have been very many innovations as well. It's just that I think in Kenya, for some reason, it has been it's done exceptionally well because of the time when it started and the convenience it created for people. But I think across the continent, increasingly, we are seeing, the worries, there are quite a number of others that are coming up. I think also just to speak in the banking sector, for us, we actually, as banks, really, I think, in fact, there was a survey that was done by McKinsey last year, and they asked the CEOs across Africa what was their number one priority, and 40% said the digital space is their number one priority. So as they put that as the number one priority, I think increasingly we are coming up with new innovations that may not, necessarily be competing with the fintechs, but they're pretty much along the same lines in that space.
Well, I don't know what the value and volume are of the examples, and there are examples. But I guess the question becomes, how important is regulatory environment toward fostering fintech growth? Because, Safaricom and M-Pesa often get referenced as a tech story, but I've often said they're just as much a regulatory story and also a branch network and a product positioning story, because M-Pesa was basically allowed, through a combination of things that happened in 2007, to have open runway to scale. Whereas if you look at Nigeria, which has a very different regulatory structure that's restricted telcos from doing payments, they've scaled much slower. So anything and anybody can jump on this about ensuring the proper regulatory environment for fintech to grow and scale. And then maybe a two-part question. We haven't seen a lot of Pan-African application of fintech, so even the success stories seem a bit balkanized in that they've kind of coalesced around certain environments but had a difficult time moving across borders. So anything on regulatory, the importance of it, and then also how do you create an environment where successful fintech apps can grow cross-border in the continent? That's for anybody.
Yeah, let me just go on this one. I think regulation is really helping in terms of putting things in order so that you avoid shocks. That's the whole idea. But it should not be a burden to the new products that are coming on the market. And this is what we did here in Rwanda, is you allow it to come, to start. Like as we mentioned, I know my colleague, Professor Njuguna, was the governor of the central bank when M-Pesa started. What he did is, let's allow it to start and work. But you should have a monitoring tool to know really how it works, to know the likely impact on the entire economy, and then from there, carefully you can put the regulation in place. So you don't need necessarily to say, stop it until I have a regulation. No, but you also have to study it. You cannot be an expert on that technology before you see it working. You have to allow it to work, then understand it, and then working with the people who are implementing it together. What should be the appropriate regulation that can allow this technology to continue, but at the same time ensuring that there's no problem on the economy. Some of them, you have to agree with them that there should be an account, an escrow account, to back the money up, because the money is going through the technology and it needs backup. If anything happens, then you know that this money is there. Because the reason is the work of the central bank is such that all the banks also trade on the money market, meaning buying the central bank facilities as they try to regulate in terms of the interest rates, but also in terms of the facilities, in terms to regulate inflation. And once you are regulating the inflation, you are selling and buying the facilities. But if you don't know how much money is backed by that technology, then you are in trouble. But if you can start slowly, understand how much money goes through that technology, is it too much to cause a risk? And if it is too much to cause a risk, what can you do? And then from there, you start from there having a regulation in place so that you can be able to mitigate some of the risks that you see within the system. But it would be not wise if just to stop it and start with the regulation. In most cases, you don't have the answers. Or if you started with the regulation, it may be the correct one. It may not necessarily be the correct one. That's why sometimes you have to allow the technology to start, work out, and then understand it properly, and then put the appropriate regulation in place.
Thank you. I just want to jump to Rose quickly, and then we'll go to Abdigani.
Okay, great.
Rose, in terms of we talked about your entity. What would be the appropriate level of regulation for you? And then we also talked a little bit about the balance between self-regulation and government regulation, entering this other very touchy topic right now on data privacy. So where would all three fall ideally for you and your entity?
Great, and actually that's something that always comes our way, because being in financial technology, it means we are right smack in the middle of the tech, which is your communications authority. On the other hand, you have your central bank, because you're offering a financial service. It's micro-lending, so you also have maybe, if there's a body looking at microfinances, they also want to understand what are you doing. There's a consumer protection, so you find if there's a body that looks at consumer protection, you have to fall within it. So what we've done as TALA is we're in markets where we don't have a common body that will look at maybe what you call the financial services as a whole. I know in Kenya that is in discussion, and we are going to get into Financial Services Authority, where all institutions that offer any form of financial services will fall under it. So your insurance, your capital markets, and so on. That would make a bit of sense. I would believe fintechs would fall under it. But in the meantime, what we do is we look at every market we're in and pick the best practice. So when it comes to consumer protection and the data that we receive, we will say, look at the most strict of regulation maybe is the US. And we look at what kind of regulation do they have, and can we implement it in the way we store our data, in the way we consume the data, and in the way we actually advise the consumer what kind of information are we picking. When it comes to things like how are we communicating with the customer, because it has to be very simple, and the kind of customer we're talking to needs to understand the financial language, we look at the best practice from our Consumer Protection Act in, let's say, in Kenya or in Tanzania separately, or in the Philippines. So we look at best practice and we adopt it already, and we say whenever the regulation will change in whichever market, we'll be ready for it And we hope to be involved in those conversations because we have a lot of data, we've dealt with a lot of customers, and we can influence such decisions as well.
And are you engaging governments at all, or are they actually regulating you in any significant way?
The different markets vary. So for instance, in Tanzania, we are registered as an MFI, a microfinance institution. So we fall under that regulation. In Kenya, we are registered as a business entity. So we don't fall under any. And I'm not saying it's the safest place to be. It just means we are making sure that we are following the very correct process so that even if regulation comes tomorrow and we are told we need to conform to something, we already have it in place. In the Philippines, we also are an MFI, so that works well for us. So whichever country we go to, we actually scout first and say, where will we fall under, and try as much as possible to get the necessary documentation or register in the most proper way. But I think for Kenya, we'll have to wait for the FSA.
And Abdigani, and then I think we have some time for questions.
Yeah, so I just wanted to quickly touch upon regulation and regulation technology. I think what I found fascinating about your question, and I think some of the comments that were made on the panel, is that we've spoken a lot about taking a very laissez-faire approach and just letting technology companies go out and try things. I think we might have missed a very important point here, which is how about regulation that's progressive, right? That tries to bring down barriers and disrupt the current market. So a good example is what's happening in Europe now, right? They are pushing out some very progressive regulation that would ensure that firstly data is kept secure, that they notify consumers where their data is, but finally they provide user-centered control. So users can actually say, you know, third party A can access my data to create a profile if it's with a bank, for example. So what this does is it really moves the center of control and data away from established players to new startups and fintechs in the market. And this is important because when you look at what's happening in markets where you have a dominant player, there is a lot less consumer choice, right? If you look at in Tanzania or Nigeria, there are around 3 large telcos and all have roughly the same percentage in terms of market share. There's more choice, there are better opportunities. So there's I think this angle that's pretty important as well. And I think when it comes to regulation, technology is something that cannot be underestimated. Rose spoke about how for every single market they go in, they have to scour, you know, the policy, the documentation, and then figure out what is the right company structure to implement in that country. This is something that technology can very quickly facilitate. There's been significant advances in natural language processing that's able to identify what obligations a company has to abide by and what would work best given the operating model, the kinds of products that company is offering. So this is something that could also really empower, enable, and reduce costs for banks, for regulators, and for startups.
Perhaps I can just jump in very briefly. I think as a Pan-African bank, we tend to see very many different we have an overview of Africa, and we tend to see that in West Africa, there's a lot more regulation as far as especially around the fintech, when banks are trying to roll out some digital products, we see a lot of more regulation. If you take an example of opening a digital account, we've actually had a very difficult time convincing the regulators to allow us to actually do that in some markets in Africa. Whereas in East Africa, it's something that is a lot less regulated around that. Rather, it's more positive regulation. They encourage it. And in Rwanda in particular, for example, the central bank is very gung-ho in terms of getting banks to roll out a lot more digital products in order to just take out the cash from the system. So we see a lot more regulation in West Africa, but a lot more sort of open to new ideas, to new things in the East Africa market.
Yeah, maybe what I can add is that what you said, progressive regulation, is that even before you put regulation in place, you want information. So they give you a checklist of what data you have to provide every month so that people can monitor what you're doing. And that way, it helps you in terms of understanding, but also creates a good relationship in terms of really understanding what you're doing, and so that the regulation that will come in place at some point, then it's more informed, it's better informed. It is helping the person who develops the technology rather than punishing the technology itself. So that's why it's very important that even before you put regulation in place, you have a set of data that you must produce, you must be getting and analyzing and interacting, and having a dialogue, and then at some point you can put a better regulation in place. And that's very, very important. But otherwise, that's why I said, if you started with the regulation, if you don't understand the technology and its impact and what's likely to happen, then it will be not correct because you may be missing some certain information.
Okay, thank you, Mr. Gatete. Why don't we open it up for questions? I think we have time for a few. And basically, I just asked if there actually is a question. And if you can just state your name and hopefully to whom you'd pose the question, that would be great. And there's a microphone. And the gentleman there.
Hi, my name is Mfuneko Toyana. I'm a journalist from South Africa. I just wanted to ask Ms. Muturi, perhaps, and anyone else on the panel, can you give some examples of what that alternative data you use to determine a person's credit score, credit history? And maybe can you give us an idea of just how many people on the continent don't have credit scores or don't have credit histories, just to get a sense of what the target audience is? Thanks.
Great. So when we talk about alternative data, I'll give an example. I want to safely assume that everyone here has a cell phone, and then there's a high probability, quite a good number has a smartphone. So the way you use your smartphone, or generally the way you use your cell phone, is you actually leave a very distinct footprint, if you will. Whatever you do, maybe the first thing you wake up in the morning is go and look at the Twitter feed to see what the information is, or maybe you go into your Instagram to see what the latest photograph was. Everything you do is sort of like your unique digital footprint. So what we do as TALA, and through the permissions that the user gives to us, we're able to sniff through some financial SMSs. We are also able to look at what other applications are they using, and maybe things like how much time are you spending on it. So an example I can give is, let's say for instance you spend maybe 6 hours on Facebook, or maybe 8 hours. It could mean one of two things. One, you either have a lot of time on your hands, or two, your business is on Facebook. So based on the fact that maybe your business is on Facebook, you have to keep loading the photos of what you're selling, it means there would be some other digital transactions that would follow. So we create patterns based on that, and also looking at the geo location. So maybe in the morning you're doing some transactions from one location, at night you're in a different location. So through a period of time we can be able to maybe to a very good extent say that there is an economic activity that takes place in this area, and then maybe where you reside is another area. So we look at all these pieces of information and we say, how can we be able to measure it, because there's no human intervention, and be able to give you credit. Another one would be something as simple as how you save names on your phone. It's very peculiar right now for someone with a cell phone to just save one name. So you say Steve, 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 Steve. Maybe you know 5 Steves. There has to be another thing that you will use. Maybe Steve, the person who delivers something. There's a way naturally as human beings we store information. So some of those pieces of data could also tell us, are you someone who's a fraudster, because saving one name is very peculiar versus saving 2 names. So I'm not saying that's all we use, but it's pieces of data that we look at. It could be something like, are you doing a lot of betting, for example? So we're not saying we'll say no, we're just looking at what behaviors do you have and how much time are you spending on your cell phone, because that creates a pattern that can be measured.
So betting would lower your credit score with you guys though, right?
No, not particularly.
Okay.
I'm just giving examples. Okay. So there's a lot of information we can get.
Yeah, and I can maybe give 1 or 2 other examples. So Rose has given some great examples in the financial services space. Other sectors like insurance are using alternative data like telemetry data. So more or less, you know, your movement patterns in your car, how fast you're driving, whether you frequently brake or not. That ends up being an indicator of whether you're a safe driver or not, and impacts your premiums, your insurance premiums. This is a very well-studied area. You know, online behavior what you're searching, what you're reading. That's usually an indicator of your interests, your reading abilities, which correlate with your education and potentially, the kind of job you do and your income. So there are a lot of these signals that you can potentially harvest about individuals.
And just to answer the second bit, which was on how many customers or what's the potential basically in Africa. So we're looking at anything between 300 million to 500 million users who would benefit from this, or any other digital financial service that's available. That's the target market we would have. Globally, the numbers vary between 2 billion to 2.5 billion.
Okay, and I promised the next Einstein press crew over here that they would have a question. So, do you have a question? There you go.
Good evening, ladies and gentlemen, and thank you for giving me this opportunity. One of the questions we like to ask, will traditional banks survive the digital era? And will they be used for us to have banks in the future? And another one would be, what should be done to ensure all women have access to financial services?
Alice, do you want to start with that first one, given your role?
This is working.
It's your microphone.
I think I have to say definitely will survive because I'm in the industry. I think we are going to transform. It's not business as usual. We are definitely transforming. And I'm sure you have seen a lot of banks are beginning to enter the digital space, as we said. We are collaborating a lot with other fintechs, including the telco companies. There's a lot of, we may compete in some areas, but we're also collaborating. For example, for ourselves in Ecobank, we are working with people like Masterpass and Visa for the QR space, QR code space. The telco companies, as the minister said, the money needs to sit somewhere. We actually hold the trust accounts for some of these telcos because as they do venture into mobile banking, they actually do need a bank. So I think the banking sector is increasingly transforming. But also, when we look at the way we do business, it's no longer efficient to run a branch. It's very expensive to actually have a branch. So if you're venturing in the digital space, there's a lot of efficiency that comes with fintech. I think there's no question about that. I think my colleagues here can attest to that. There's a lot of efficiencies that are created. And therefore, because of those efficiencies, we are finding that we can actually roll out more interesting products because they're more cost effective. And therefore, the pricing for the off-taker, the customer, is a lot more interesting. If you're unbanked, we can bring you in the banking space because the cost of doing banking with us is actually reducing. So I think there's a place for us in the banking sector. It's just that we definitely have to transform. And I think a lot of banks realize the need to transform, and they're beginning to work on those areas and see what it is that they need to do differently.
Yeah. Maybe I can add to what was just mentioned. It's a really good question, and it's been brought up a number of times. Are banks going to be disrupted? What will the bank tomorrow look like? And there really are two views on this. And there are really two views on this, right? The first one is that no one does banking better than banks, right? They have all the necessary, regulation and policy, decades worth of expertise, deep understanding of risk, right, and all the correct mainframes and infrastructure in place to keep you safe and secure, right? And when you look at the transformation that they're taking, they're working very closely with fintechs. And so there's a transformation happening here, as was mentioned. The other view is that it's not really going to matter. What will matter is who ends up owning the customer engagement, right? Who has that direct relationship, and everything else will be commoditized, right? That's a very extremist view, but we're already seeing, I think, the first steps in that direction with Amazon trying to offer financial services, with fintechs, progressively engaging more and understanding customers better. So if it reaches a point where your primary point of contact is an e-commerce company or a telco, you end up going through that medium to access all your other services. So this is the disintermediation of financial services. It's an interesting idea and notion, but we'll see if it really ever gets there.
Anything on, just to your second part, financial inclusion of women, which definitely we should have discussed, so thanks for raising that.
For me? Oh, anyway.
For you, sure. Yeah.
Okay, so basically for us, what we do when it comes to financial inclusion for women, we are very deliberate in the type of communication we use. We understand that financial services can be a bit scary, especially when, no offense, but the banking sector will say APR and fancy language. It can actually end up making communities that were originally marginalized feel the fear of getting into financial services. So what we've done is we use very simple language to communicate, and what we use it in a generic way, but we're targeting the women segment. So we tell them that the services you're accessing are private to you, so make sure your password is private, so they feel, okay, no one else has to understand that I'm actually borrowing. Maybe I'm in a market setup. The next person doesn't have to understand. So the way they internalize the information is actually very different, and we've seen it working very effectively, to the point where when it comes to the repayment levels, it may sound cliche, but the women actually are better payers in our book. And also, we are very happy that we've gotten to over 30% of our customers are women. I wish that number could be higher. That's the number in East Africa. In the Philippines, it's the opposite. 65% of the applicants are women, and 35% are men. And it's because of the way also socially actually the social construct is. So we're very deliberate in our communication, just specifically to make the women understand it's a product for them as well, and they don't have to disclose to anyone as they go through their financial services.
Mr. Gatete?
Yeah, if I can, I don't think, first of all, the banks will survive, but they'll be totally different banks. And the needs of the banks will be different. You need someone in technology, you need someone in data, you need a different brand of the people who used to do banking. But the banking will continue because transactions will also be necessary. But I just wanted to touch on women. I don't think there will be access. We have experience here in Rwanda. It is just giving women opportunities. Initially, they were disadvantaged. They needed help. And for us as government, have invested heavily. For example, you could find, before we changed the laws, initially, access to land, access to inheritance, you find women didn't have collateral. So going to borrow money from the banking system was very difficult. So what we did was to actually establish a fund, the Business Development Fund, to make sure that they can give guarantees up to 75% for women and youth only. That way, then it helped the women really to be able to access finance and make sure that now the number is increasing very fast. The good enough is that the women are less risky. If you see in our numbers, I don't have the latest, but in terms of non-performing loans, the women have always relatively low compared to men. It has been very consistent. And they are the ones who pay back the money, if you look at the data. And that way gives everyone confidence that lending to women is very, very important because they pay back the money. And they use the money where they're supposed to use it. In other words, men are risky. So what we're saying is that this has been proven, and there is no reason why they cannot access if you provide them actually the resources, the facilities that are necessary. In the banking system, in the rural areas, in urban areas, you'll find them actually being more careful. So we are seeing in Rwanda the numbers going up very fast, and women taking advantage. And that's why we are seeing that in the future, we don't need to discriminate between men and women, because at that point, at least, women and men will be at the same level in terms of access to credit, as long as they can use the tools that is available to them.
Well, on that positive point, we are actually out of time.
I'd like to add something about...
Just very, very quickly, Moussa. Yeah.
I would like to add something about the future of banks. It's important to notice that the bank in Occidental countries, in European countries, in America, the mindset will be very different in Africa because the needs are very different. And we have seen that in just in 10 years ago, the shift that operated by the beginning of mobile money. And then this is the signal, a very hard signal that bank must take in account and about the way they offer services to customers.
All right, thanks, Moussa. And with that, we're out of time. This concludes the next Einstein Forum Africa FinTech panel. And please give a round of applause for our panelists. Thank you.